hate to be compared to a meteor because they usually fall. I've been to Russia, it's a nice place, but you saw the videos, it's kind of alarming. The Senate Finance Committee, which I'm the chair of as of this year, has 7 members. So in the Senate, most of the committees have 5 members, but the Appropriations and Finance Committees have 7. Usually these committees benefit because they're viewed as having a lot of institutional power. The people who are on those committees want to stay on those committees. And but this year in the Senate Finance Committee was somewhat unusual. We have 5 new members. So I was on the committee last year, and Mark McDonald, who's the vice chair, has been on it for some time. But we have 5 new people. So just from a structural point of view, we've spent a lot of time providing the type of background and foundation building for the 5 new folks. Because, as Adam said, the committee jurisdiction is very sweeping. Renewable energy financing, health insurance, healthcare financing as it relates to the public sector, insurance regulation, banks, credit unions, all fees, all taxes. Probably missing something, but unemployment insurance, workers' compensation. So you can see we have a huge jurisdictional breadth in the committee, and it takes some time to get people up to speed. I'll just point out a couple of issues that I think are of particular relevance to folks in the room. One is S55. I don't know if a previous speaker has talked about this. Every year there is a new appetite by some members of the legislature to contemplate a so-called state bank. And they say, oh, look at what's happened in North Dakota. If Vermont were merely to add the one ingredient of a state bank, we will have the most spectacular job growth and we will have amazing revenues. We'll have to duck, there'll be so much cash flying into the state. They failed to mention that the Bank of North Dakota has existed for 100 years, that in fact it was created because all the other banks had failed, and then its banking culture has grown around the state bank in North Dakota, whereas if you introduced one in Vermont, you would be asking for the sort of state bank to grow around our existing lending institutions in the state. That was my ungenerous way of giving the prelude to S55, which is the so-called state bank bill. What the bill actually does do, and this is why it might be interesting to you, is tries to not put the issue of creating a state bank at the forefront, but rather say, what are all the areas where the state is either through quasi-governmental entities or directly involved in the business of lending. So VITA, the Ag Agency has some areas where it provides subsidized loans, monies used by the Treasurer's Office, Municipal Bond Bank, all the places where we're deploying cash that has an impact in economic activity and other lending practices here in Vermont. It tries to see what would happen if we tried to blend or merge those different entities. Would we get any administrative savings? Would we get more expertise, that applied more broadly? And I think we now are at the point where the treasurer and the auditor and others in the administration are willing to start looking at those questions importantly. But what's critical in that bill is it's not saying replace those people who are already in the business on the ground, which is different from past years where it was really saying let's crowd out the people who are in the credit unions, the banks, whatever. And it's saying how do we coexist in a way that maximizes the most activity in the state of Vermont, which I think is a really, really positive thing. Second issue, and this gets to right now at the end, so-called end game in the legislature, where the Finance Committee really, we only have to pass 2 bills really, and that's the fee bill and the tax bill. And the tax bill has at least one provision which, for those in the room who are involved in mortgage lending, both the House and now the Senate have contemplated capping the home mortgage interest deduction that anybody would be able to benefit from. And which isn't entirely popular in lending crowds, but the thinking goes like this. We have every year a booklet created. It's called the Tax Expenditure Book, and it is a catalog of all of the areas of Vermont's tax code where we give various deductions or tax expenditures. So this would include our corporate incentive programs. That's kind of a direct cash outlay to businesses if they meet certain performance measures. But then it also includes how much money for the earned income tax credit, another example, but also areas like tax-exempt properties, which is an issue that you guys would care about. Also areas like home mortgage interest deduction. How much money do we not collect because we extend this benefit, and then we look at it by income bracket. What we have been trying to do in the Senate Finance Committee this year is to evaluate across all of those so-called tax expenditures and say which ones actually don't make sense anymore. Or, to put it another way, which ones are no longer serving the purpose that they were intended to serve. In the case of the home mortgage interest deduction, if I think you ask people broadly across the state, what is the point? What is the purpose of our home mortgage interest deduction? The answers, I think, would coalesce around some answer like the following: to help more or less ordinary people be able to afford a more or less ordinary house. And for many people, that's true, and that's what the home mortgage interest deduction helps enable. There are obviously examples where someone might have $1 million house, and we say, well, the massive deduction benefit that they are able to claim, maybe not, it wasn't the purpose. Whether we want to undo it or not, we should revisit it and say, is that what we intended it to do? Second or third homes, many of which aren't even in this state or even sometimes in this country, are also eligible for tax benefits in our Vermont tax code, and that's another open question. Boats, sometimes, you guys probably know more about this than me. We have one person on our committee who will go unnamed who happens to have significant wealth. He knows that boats are eligible because he's received the benefit. But the questions that we're asking are, what was the purpose when this was instated? Is it still serving that purpose? And then kind of going from there to see if it merits retaining it exactly the way it is or not. The House and Senate have both contemplated a $10,000 cap on the home mortgage interest deduction, a $12,000 cap, and a $15,000 cap. Those aren't magic numbers. They're really starting points just to see who would be affected and how much, if at all. But I think that's just an issue to raise your awareness so that if you and your colleagues are desirous of testifying in the committee to talk about the types of homeowners that we're really talking about, we invite you to come in over the coming weeks, and you can do that through the association that brings you here today. So that's kind of my hopefully not too rambly monologue. Those are just kind of some of the issues that are coming up in the Senate at the moment. So I'd be happy to take a couple questions or just transition over to my counterpart in the House, Bill Botson. But if there's a quick question, I'm happy to answer it.
Tim, quick question. Do you know if the committee or the House committee that's looking at the state bank has looked at the Federal Reserve of Boston's analysis of the state bank?
Did everyone hear the question? It was whether those who are interested in this state bank-like study have looked at the Federal Reserve Bank of Boston study on a state bank, which was, I think, produced 2 or 3 years ago. It was a few years ago. And the reality is, this type of study has happened like once every 2 years. And so it's, how do we get more bang for our state dollars lending buck? And that was evaluated in the last go-around, and it really talked about how it was very North Dakota specific. And
well, it's the only one that exists.
Well, meaning that the conditions which have allowed it to thrive may be very specific, and so it urged a lot of caution before thinking that was a tool that just any state could go forward and benefit from. So the short answer is it's already been considered in earlier studies of the same ilk, and I think will once again be used by the treasurer and some others who are skeptical of a state bank per se. They'll say, well, I mean, I think here's where the roadmap is ahead. It's to say, what are the things that our current lending institutions either aren't or cannot do, both in the private sector and through the government sector, and let's identify those things and try and do those better if there's an economic case to do so. Not just do something because symbolically it feels like, you know, cool.
Thanks.
Sort of following up, in terms of like the state bank plan, what institutions would be divested from if that were passed?
The bill doesn't talk about where the investments would be and things like that. That would be for others to decide. I mean, one of the risks, of course, of any there is a proposal in the Senate and I think in the House right now to like divest state pension funds from certain types of investments like oil, you know, other fossil fuel type companies. And the challenge there, of course, is that the moment you politicize it, it gets wide open, and then every year you might have 50% of the legislature saying, well, we don't like giving money to renewable power, you know, if there was a swing in this legislature, which would have to take a big swing right now. But, you know, you can kind of go back and forth. The moment you open it on principle, you've opened it wide open. So I think that effort probably won't get very far on principle grounds, even if some people wish that we could segregate out those funds. But the bill is silent on that. It's really about the mechanisms and how we can leverage the existing mechanisms better, not so much what will we invest in and what won't we invest in. Well, thank you very much. I'm always available throughout. If you have anything you want to testify in our committee on, if you see an agenda that seems particularly interesting and you have expertise you'd like to lend, we have turned down no one, and we will not start with you.